Leo, welcome to Beyond the Inbox. Thank you so much for taking the time to join us.
Nice to be here, Sam.
Can you tell us a bit about your background and how you got into venture capital?
Yeah, so I actually started back in the corporate world. I was as a consultant, so I did about 5 years of my professional life, and that was the beginning of my professional life as a consultant. I traveled the whole world, did a lot of different projects, and got a kick out of it for about 5 years until the time that I got fed up with the impact that I was having and with the ways that we could actually change things in our organizations. So I wanted to go to this startup board, and I made the shift after 5 years to basically start with one of my best friends from university, a company called GoCase. So it was our first startup. We started up back in 2015, and we grew that company to 8 figures very fast in about 3 years. But basically, I went from the corporate world to the startup world and being a founder in a very short time frame. And then acquiring these experiences with GoCase, which is a D2C e-com company. Yeah, we basically understood that everything that we learned and all the things that we played with, all uh, the failures we had and all the successes we had, this were replicable. So we understood that we could do something with that knowledge, and we could help other companies grow as well that were in the same category, the same niche. So basically, after getting a little bit to the boredom stage of I want to do something nice, I want to do something new, we started Jump Ventures, which is actually a VC slash incubator to grow and accelerate e-commerce companies that are within the 6 figures.
Can you tell us more about GoCase? What type of business was that? I know you mentioned D2C, but what vertical were you in?
So GoCase is a tech accessories brand. It's a brand we still run, and it's a brand that has a worldwide footprint. So we basically started with phone cases, and we expanded this to a really big portfolio of products, and even go into textile like backpacks, lunch bags, and a bunch of other things. But we started as a tech accessories company that had customization and design as the main value proposition, and that's how we actually grew a international D2C brand.
You mentioned you were able to grow that brand to 8 figures. Was that something that came with a lot of trial and error, or was that something that you had some luck with? I know timing is often important with a lot of brands, but I would love to hear more about were there any specific strategies that help you do that?
Yeah, I think there's this saying, luck is when preparation meets opportunity, right? So we definitely had a lot of tests. We tried everything we could. We consumed every type of knowledge from podcasts, articles, other entrepreneurs, and tried to suck that in and say, okay, what's the next thing we can try? How can we try this differently? What can be impactful today? So we tried a lot. Yeah, everything that was said as an opportunity to make impact, we were trying. So we got this 8 figure kind of level after 3 years and totally bootstrapped. Yeah, so there was no investments. There was really the completely self-invest out of trial and iteration. So that's how we got to the 8 figures. And of course, there is luck in one or the other situation, but it's because we tried so much. Otherwise, we wouldn't have gotten there.
You and I were talking in our pre interview, and you said that you and the rest of the team have developed this playbook, and that's what we're going to talk about in this episode. What is the best way to start describing this playbook?
Yeah, so the playbook is basically our knowledge and experience um, in an up to date form of how to run and grow a D2C e-com brand. Yeah. So this is what we gathered in this 8 plus years of GoCase, and this is how we constantly update with new companies and with the market changing, with Meta changing its landscape of advertisement, with TikTok coming in, with new channels like SMS and messaging being impactful for retention and acquisition. So this is a playbook that encompasses all our knowledge, our tools, and our network to grow brands.
So, can you talk a little bit more about the levers behind the playbook? And I would love if we could go through each of those on this call right now.
Yeah, so we have a process that is intuitive to grow a brand. Yeah, and it's separated in some steps here. The first step is the growth strategy. So, which channels, which tech levers, which revenue buckets we can actually have within the a specific brand. So, can we grow it via TikTok? Can it grow via Facebook? Is it a brand on Shopify? Is it a brand that has subscriptions on? So this is like the growth strategy. Where can we actually lead the company to reach 8 figures as fast as possible? Yeah, what's the easiest way to reach that on a growth landscape? The second one is the content strategy. So it's really analyzing which assets does the brand possess, and how we can generate a content machine out of that. So how can we constantly put out content that is tested and iterated to see if we can get a outlier content that can be scalable. And we try to think about UGC, influencers, studio, own team, freelancers. So what are the assets the company possesses so we can continuously play and generate a lot of content? Yeah. The third one is the commercial planning. So it's really thinking about the product portfolio, the pricing, the merchandising, the returning customer rate, and how we can further develop that. So it's really thinking about the dollar signs, the euro signs that you can really put on your product portfolio, and how you can constantly optimize to increase repurchase and AOV. Yeah. The fourth one is the financial structure. So we know how important it is to be financially optimized and to think about all your cost categories and revenue categories in your P&L to actually reach scale healthy in a healthy way. So we understand that it's really possible to scale profitably and in a very pragmatic way if you think about it beforehand. So we really optimize on the finance level. The fifth one is the data and tech stack. So how we think about which application should we run the brand on, which is the way that we're going to do reporting, how we do attribution. So how do we put everything together to have a very data driven approach to run these companies? And the last one, if applicable, is internationalization. How do we expand beyond the home market, and how do we get this in a minimum effort and maximum impact kind of way? This is the jump. Like, how can we think of ways that we will put a minimum effort but create the maximum impact of it?
So, we have some time here, and you mentioned to me in the pre interview there is a company, I won't say their name as there is an NDA in place, but can you use that company as an example, or any company that you like for that matter? And can we go through each of these stages, stage by stage, and talk about some of the things that you did and maybe what our listeners can do as well?
Yeah, for sure. So this one company you mentioned, unfortunately, the confidentiality, I cannot share the name. But we went in 2021. They were making around 1 million US dollars in annual revenues, and by the end of 2022, they have made 20 million annual revenue. So basically, 20x in 1 year time frame. Yeah. And we just did the really programmatic approach that I talked to you about here. They were at the stage where they had derailed because of the iOS update, and they were constantly on a down. They really had assets in terms of people are making content, customers are happy, so on and so forth, but they don't have a content machine, so their content was totally outdated and completely saturated already from doing the same advertisement with the same type of content and concept for a long time, and their metrics to scale AOV and repurchase were not very well thought of. So, if we really want to scale a brand, we believe that you really have to think how you're going to grow the AOV and how you're going to grow the repurchase to make sure that you can scale profitably, and to make sure that you have a path of step by step growth. Yeah. So when we think about that brand, we started by fixing how we thought about the growth strategy. What was the channel that we could focus on, which was Meta at the time. It was Facebook. and how can we start really generating content for that platform. We played a lot with influencers and customer created content and our own studio photography, so statics. And we really saw a healthy mix between influencers that were able to tell a very good story and were able to create a type of concept that was not just unboxing, but was the whole product experience. It was a DIY product, so basically do it yourself, and they would show the whole process of how they did it. They did the product themselves. And the static photos that we could generate on our own studio had a very good performance. So that mix of those two were able to really significantly drop prices and CPAs on Facebook, and we were able to scale. So when first thinking about how we're going to push and where we're going to push, we saw Facebook, we identified Facebook. There was a lot of room to grow there, things we could be way better done. And on the content side, we had a lot of assets, but these assets were not well interpreted or analyzed to see how we can take the most out of them. So we identified the best ones. We understood how to which ones would give us a good CPA, and this is via a very um, analytical process of campaign testing, yeah, of content testing, and this was the initial way to push, yeah. When we talk about the following steps, because these are really significant impact, we talk about the AOV. So they went from around $35 AOV to almost 70 in this time frame. So this is a game changer. When you're able to create bundles, create add-ons, upsell, cross-sell, and etc., you are really able to push much more on paid media. So what we were able to do is on this time frame that we're actually growing acquisition, we're at the same time growing their AOV. So basically, we're able to afford a higher spend on advertisement, and we're able to afford clients first go at a more expensive CPA, even though we didn't need to, and then really get a high volume of new customers. Yeah. The third thing that is important to consider while trying to grow is your product portfolio. This comes with the commercial plan, needs to reflect a high detailed or a high thought of product calendar, product launch calendar. Yeah. So we were able to make product drops every 2 to 3 weeks that will really incite new customers, but most importantly, current customers to repurchase. Yeah. And we always had something new to do it either in the advertisement or the email campaign flows. So we were really able to spark a lot of attention and drive a lot of growth with a pragmatic product calendar. And this really helped to create the growth we needed and to guarantee the results of certain months. Yeah. So when you think about this first journey, the first step of the journey was really thinking about the channel, thinking about the content, and thinking about the products. Yeah, how we price the products, how to bundle the products, how to create new products. This is the major part of the scale itself. Yeah. And then comes the second part, which we talked about financial optimization and the data and tech stack. So if we start with the financial optimization, we're really able to create targets. Look, this is the target we need to reach of costs. This is how much we're willing to go on advertisement. This is how much we should think if we're going to add people to the payroll or add freelancers and agencies. And they then had a very good blueprint to say, okay, we are within boundary, we can push this much, we should go for this much. So it was much more clear on how to create those targets and how to push for those targets month over month, which is one of the things that a majority of entrepreneurs miss out. Yeah, and is one of, I would say, the key aspects of failure is not having targets. If you're not able to set out targets and strive to get to those targets, you basically are going with the flow and you're not gonna experience a high growth path. Yeah. So when you're able to, these are the targets for the month, these are the targets for the channels, these are the targets for the content creators, then you're able to quantify and see how you're really doing and push things. Yeah. So the financial optimization, setting targets was very important. Then we go to the data and tech stack, which was implementing supportive applications on Shopify, um, implementing the right reporting and attribution to make sure that we didn't have analysis paralysis and we were taking the right decisions. So all of that was extremely impactful to get to the later stage of growth.
And what about the internationalization step? Is that something that depends on the size of the company or how fast they are accelerating through these earlier stages? Can you speak on that?
Yeah, so the internalization for we usually think about internalization in two steps. The first step is there an easy win? Is there something we can just add a country or add a logistics route here and generate a good profitable purchase? Yeah, this is the first step. And the second one is, hey, I think we are saturated. I think we are reaching a cap here in this market. How can we think about a proper planning to expand the brands? Yeah. So when we deal with European companies, this is quite usually quite the path where they are very constrained by their home market. They're hitting caps, and it's very easy to go to an adjacent market and make another bucket of revenue. Yeah. While when you go to the US companies, it's more like, okay, the US is a really big market. There's still a lot of room to grow here. And if we want to add another country like Canada or Australia or the UK because of the English language and proximity, we need to think if it's because we can really quickly just plug and play and get a profitable purchase, or are we going to have a lot of headaches? So when we see that, hey, we're going to have a lot of headaches in Canada because of the customs and duties procedure, or we cannot get good shipping rates to Australia, etc., then said, okay, leave it. Let's stick with US only. But if we're able to do it without much pain, let's go for it. Now, for the other path that I told you, most European companies will experience, then you really need a pragmatic way to, okay, how are we going to localize the website, the experience, find content makers in different languages, so on and so forth. Yeah, so it's a much more planned approach.
For anyone listening to this now, they might be thinking, well, this all sounds great and it makes sense. But what about me? I'm on a small team, I have a limited budget. My question for you, Leo, is how can someone get started with this playbook? Should they focus on one stage and mastering that before moving on to the next? Should they look at this as a very long term play that they are working towards? It can be very overwhelming for some businesses. Where do you suggest they start with something like this?
Yeah, so actually it's very, very simple. It's approach and a mindset that we have to drive the growth in any company that we touch. It's minimum effort, maximum impact. So entrepreneurs usually get overwhelmed about all the things that they can do, that they should do, that they could do, that would be nice to do, but in the end, they don't prioritize that the right way. And the right way for us is how much effort does this project, task, etc., will take out of you, meaning people, money, or time. How fast can you validate that this is going to work? A day, a week, a month, 6 months? And what is the probability for impact? High or low? When you start putting everything in these lenses, you're going to start saying, hey, if I change the prices today by 10%, I most probably will get an answer if this is a good or a bad thing within a day or a week maximum. And has a high probability for impact in my profitability. While doing an SEO project, for instance, might take 6 months to actually start to see results. It's going to take a lot of efforts in terms of time and money because you're going to hire an agency, so on and so forth. So when you look at this and say, okay, SEO is important, it is. But the first thing that I should try to do here is change prices. This is a very clear example for us to give, right? And this is how we think about growth. When you start using this to everything that you do within the company, like changing prices, negotiating supply chain rates, seeing if you should put an app that costs $50 or not, seeing if you should invest on email marketing or not. Like it becomes very clear that look, this is the cost of the opportunity. This is how fast I can validate it. But if it does work, the impact that it can bring, it will be significant or not. When you start doing things like that, then it's clear. And then I want to just yeah, maybe mention to listeners, what are the four things that we have in mind, the four KPIs that we have in mind to make sure that we're taking the right decisions. Yeah. So the first one is reviews. Like if you don't have high reviews, you're not in a 4.7, 4.6 out of 5. Yeah. You don't have a stable product or a stable experience. Yeah. You maybe are trying to scale something that still has a lot of shortcomings. So if you do that, you're just going to hit the brick wall, come back, or you're going to have a lot of pain trying to go. When you have a very validated and accepted product, things are way easier to actually scale. Yeah. You're set for scale. That's the first thing. Um, the second KPI is repurchase rate. So we try to work with 30% repurchase rate. So we try to aim at least having 30% repurchase rate. That's a healthy rate to try to get customers to repurchase and add you that extra layer of profitability. Because if you're really running on the back of acquiring new customers every month, it can get pretty expensive and can get pretty difficult to sustain over a course of a whole year. So making sure you're working on repurchase, and this comes with CRM channels like email, SMS, messaging, so on and so forth, promotions, pricing. If you're able to work on that and you're increasing your repurchase rate month over month, this means you're going the right path. Yeah. Third one is the AOV. We usually like to work towards an AOV that is at least $75. I know companies might be at a $15, $25, $50, but you need to see a path where you can bundle things up, launch new products, launch more expensive experiences that can get to that 75 US dollar. Why am I saying that? On the status that we have right now of meta advertisement, TikTok, so on and so forth, is very expensive and it keeps getting more expensive year over year. And we see that the brand that performs under 50 US dollar AOV just has a very hard time acquiring new customers. It's very difficult to make a buck out of it. So when you, even if you are at low AOV, but you have a plan or you're trying to do things that your AOV can increase, this is what you should be thinking about. Yeah. And the last but not least is conversion rate. So you do all of those changes, you make all of those tests, but you have to keep conversion rate as your north. Yeah. So we like to work with companies that really have a high conversion rate because it gives us room to test and gives us room to constantly see that we don't waste a lot of effort because the conversion rate is too small. And generally speaking, if you can keep your conversion rate above 3%, that means okay, you have a stable path here to continuously push. If you're already at the 1% or below, this means that everything you do has a high probability of not working and can be a high effort that has very little impact. So I would say, look, it's product market fit is not only the reviews, but it's finding the right pricing, the right portfolio, in the right way, mix of channels like acquisition and retention to make sure you get the high conversion rate.
That's super fascinating. And I have a few follow up questions regarding conversion rate. That's from non buyer to buyer, I assume.
Yeah, exactly.
And regarding repurchase rate, what about brands that don't have a subscription offer or brands that are selling super low or super high ticket items? What would you say for brands in that category?
They need to figure out. So one thing that I've encountered of many brands that come and talk to us, if they are a single product brand, or they are a very high ticket brand with uh, very uncomparable ticket items in the portfolio, they need to figure out a balance because no brand can sustain growth with one purchase every decade from a customer. They really need to work on repurchase. This is where the profitability comes in play. Acquiring customers is very expensive nowadays if you really focus on digital marketing. And if you don't have a way to finally monetize those customers because the profitability really comes from the repurchase, then yeah, you're setting yourself short because you cannot sustain that growth month over month. We have several benchmarks in the space that yeah, as a single product that doesn't fly.
It's interesting as well that reviews is one of those KPIs because I do feel like if you want to drive more reviews, if you're not doing it already, it can be as simple as running an experiment to implement a capture a review workflow, and you can optimize that over time. And I feel like that's something that could be a very quick win for a lot of brands that maybe aren't getting as many reviews as they would like today.
Yes, a lot of companies overlook the necessity of a feedback loop, be it star reviews, NPS score, etc. You need to be constantly monitoring the feedback of the customer because this is an input to improve the product, improve the advertisement, improve the content, the description, and you just need to have a lot of feedback. You should strive to get a lot of feedback. It's not striving just for sales, but if you don't have a lot of feedback, it's hard to see where you should improve.
Well, this has been a really fascinating conversation, Leo. The time has flown by. We're soon coming to the end of our conversation, but one question I want to ask you is, for anyone listening to this right now, what is the one piece of advice that you would have for anyone in the e-commerce space?
Well, what I think about the e-commerce space is that it's a very volatile space. It goes up and down, and you have the feeling that every quarter there's something new comes in the table that is broke hell loose, and you have to figure out how to do it. Yeah. But basically, it's the approach we took since the beginning. If you constantly try to test new things, if you constantly try to listen to podcasts, to see the Twitter threads that are actually getting viral, to understand how the market is going forward, and you're a little bit paranoid about how the future is going to play out, you're just more prepared of how you can face those situations. So whenever a new iOS update comes, you are a little bit more prepared of how you could have taken. So basically, my advice is really be paranoid about how you can investigate the industry, what are the changes, and how you can constantly put out tests in your company to see if you can get to a better level of profitability and revenues overall.
I think that is a great place to start wrapping up. Leo, where can our listeners go to learn more about Jump Ventures and everything you're doing today?
Yeah, if what I spoke resonated with some of you, you can go to jumpventures.co and fill up the intake form we have there. We usually mentor and coach companies free of charge that we think have a potential to grow. And once we believe that that potential can be really materialized, we have a engagement to invest in them, accelerate them, so on and so forth. So if it stroke accords with any of the listeners, please feel free to go to jumpventures.co.
Perfect. Well, we will put that link in the show notes. And Leo, I want to thank you again for taking the time to join us today, and all the best in the future with Jump Ventures.
Thanks, Sam. It was great to be here.